I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending June the 23rd, where we had a week full of big news. Just starting early in the week with the news that JBS was going to sell off Five Rivers, which is the world's largest cattle feeding corporation, almost 1 million head feeding capacity there. And we talked through that, and if you were watching through the week, we assume that some big money outfit will come in there and buy the whole thing. But which really isn't going to change anything other than the name as far as demand and the everyday operations of how that feeding capacity is going to be handled. But if they do end up splitting that up and maybe selling off some capacity in some states, or maybe even the northern plains and southern plains, but if they split that up very much, that will indeed change the dynamics of your feeder cattle demand, because if you start splitting it up, regardless, they're going to be going for their procurement needs of feeder cattle. They're going to be going into places that maybe Five Rivers wasn't before, or they may be leaving some of those places, going to different areas, and that will definitely change things, because that's a lot of cattle. That was about 10% of where feeder cattle were going, is in those yards, so that's a big deal. The next news we had in the middle of the week there was McVane Trading and Investments. CFTC announced they were going to be fining them. They're Charlie McVane, Memphis Charlie. A lot of you have heard him and his associates and his trading company there. $5 million, basically for overly supporting live cattle futures. Said they overextended their limits, used all their limits and some of their customers' limits, buying feeder cattle future or live cattle futures, going long on those. It wasn't a hedge. They were going in and buying that market, trying to lift that market up, and it was back in 12 and 13 where things were really going up. And they said that the bad thing about that was it made it appear that there was more support for the market than there really was. But you know, you would have thought that if they had customers they were handling their risk management for, that they would have been able to make those trades for them, and that would have been included in their limits of holdings there. But evidently not. But that's a big fine for them, and McVane is a big player in risk management for our major independent cattle feeders. But you look at the board for the week, live cattle futures, this is all on the August contract. Monday was down 207, Tuesday down 20 cents, Wednesday down 55, Thursday down $1.07, and Friday up $1, with August live cattle futures ending the week at 115.27, down just $2.90 for the week, and that's nothing compared to what cash fats went down. But feeder cattle futures on the August contract, Monday was down 287, Tuesday down $1.07, Wednesday up 72, Thursday down $1.20, and Friday up $1.50, ending good with some profit taking there from some of those traders. But your August feeder cattle ended the week at 144.95, down 292. Now you look at your fat cattle trade, and we might mention that your June spot live cattle futures, which is what's going to have to come together here real quick because we're getting towards the end of June, sitting at 119.20 at the end of the week, down $2.50. But that is getting real close to where they're trading. Actually, we might have a negative basis there on some late week trades. So we were running with an $8, $10, maybe $12 basis for the last couple months, and then it doesn't take very long the way that these feedlots are giving up market position here late in the month to get those things to come together. But through Thursday, they had 81,700 head in your 5-area feeding region that sold negotiated. It was just lower, unlike the previous week where we lost all that ground there through the week, started out decent and then went down. We started out early this past week a bunch lower and then just continued that way. But early sales on a live basis were around 122. They continued to fade. Late week sales were down as low as 118. Live basis, your weighted average is around 120, 150. That's $9 to $10 lower on the bulk of trade there on Fat Cattle Live. And that's so we really lost about $20 a live basis on your fat cattle negotiated market there, and that's horrible. You know, we've been working on this market ever since early spring, trying to build it up there, and just give up $20 in 2 weeks. It's hard to believe. But you look at your dressed market, early sales this past week were at $199. They continued to flush down with late week dress sales around $190. Your weighted average on that is just under $194, which is about $12 lower on the bulk of this past week's trade compared to the bulk of the previous week's trade. But box beef cutout values have indeed started to fade fast and ended the week sharply lower. But on the average of your average trade on your box beef cutout values last week, choice carcasses on the average at $244.90 on the week. That was down $5.96 compared to the previous week. Your spread is closing as choice is going down a lot faster than select. Your average week's trade on select carcasses $218.76, down $208, and that spread is down to just over $26 now. Your slaughter was pretty decent for the week there, 632,000 for last week, which was needed and pretty much expected. That's 4,000 more than the previous week and 24,000 more than the same week a year ago. But and a decent Saturday, or a real good Saturday. We were hoping for maybe more, but 49,000 expected to be slaughtered there this past Saturday, compared to 43 the week before and 45 the same week a year ago. Cattle on feed report come out on Friday there. That's all we needed. There was a kind of a bearish tone to that, and it did indeed have a bearish tone. We were thinking that it was going to be bearish, and a lot of times when we think it's going to be bearish, the numbers aren't as bearish as the estimates, but they were this time. So kind of a neutral to bearish cattle on feed report. If you look at the numbers there, on feed inventories at June 1st there, your actual come out at 102.7% of the same report a year ago. Your estimates were at 102.2, so about 0.5% on the bearish side there, which that's not too bad. But your placements, they were expecting placements to be heavy, and they were even heavier than they thought. Your May placements come out at 112.2% of a year ago. Your average of the estimates was 110.1. So that's sure enough bearish. Your marketings, what you would expect them to get, they absolutely nailed them with actual and estimates exactly at 108.8% of a year ago. But these placements have just been really heavy this spring. Well, we kind of knew that. I mean, we know that our calf crop was larger, but we've had a lot of placements just this spring here in your spring months, the last 3 months. Had your placements have been near 600,000 head larger than just last year, and that does not bode well at all for late summer and early fall fat cattle market, because that's when those cattle will be coming out. But if you look at this past report here, this June report, it was of course your placements were 12%, over 12% more than the year ago, but it was mostly on lighter cattle. Those weighing over 800 pounds was only around 2% more, so I'm not saying that's going to save us. We're still going to have heavy supplies of fat cattle to market late in the summer and early in the fall. So if you've got some summer yearlings or early fall yearlings or calves to sell, you might want to go ahead and contract those, sell them on some kind of an out front deal, because things are not going to be real perky late in the summer or early in the fall, which a lot of times they aren't, but it's going to be that way this year for sure. But right now, market ready supplies are still around 10% lighter than they were last year, and we just lost 20 bucks in the fat cattle market in the last 2 weeks. So somehow these feedlots are going to have to stay aggressive in their marketing and eventually try to hold some market position at some point. Can't keep coming in here on a Monday and Tuesday and giving up $5, $6, because it just takes all the leverage away from the guys, and then they lose that much more later in the week, and you look up and you've lost $10 compared to the previous week, and we've done that twice in a row now, and you know, we're going to get down really low here. We could get down below $1 here before 4th of July if we keep doing that. But you look at the feeder cattle market for this past week. Feeders, you know, early in the week it was just kind of unevenly steady. The week there, it all depended on how severely lower they were the previous week. So we just jostled around there. But late in the week, with the loss of your market position on your fats, the board being down all week, and just everything weighing on the market, your late week sales showed the full brunt of the losses there. And your yearling sales on a cash basis there were $3 to $8 lower. Calves were more severe than that, $5 to $10 lower. We're not seeing a lot of calves being sold right now. Most all your cattle right now should be turned out still. And so we shouldn't be seeing many calves moving, and we're not. But where you do see some heavier calves moving, there's not a lot of demand for them because there's nowhere to turn those cattle out. You're going to have to lock them up. We've kind of seen some relief here late in the week and through the weekend, but all last week and the previous week it was over 100 degrees through most of your major feeding areas, so that does not bode well for shutting calves up and that. But still, where you see true yearling cattle in bunches, in big bunches, in loads, then you still see some good demand. There's still a lot of demand from farmer feeders. They're not looking to have a very good year on their row crops, and they're looking to walk some of their crop to town and help things out a little bit there. And so we're still seeing good demand so far for your true yearling cattle, and I think we should see that on through here the rest of the summer, especially when those true green yearlings start coming off, because the sales that we've seen right now and here the past several weeks on yearlings, you know, they might be true yearlings, but they've been backgrounded and supplemented. But it won't be long we start getting into July, and we'll see those double stock cattle coming off those major grazing areas, and those cattle will be absolutely true green, and that's where your feedlots will really belly up to the bar and pay up for them, because those are the best performing cattle of the whole year, and they want to get their hands on them. Your real-time index did not drop much this past week compared to the previous week. It ended the week with 800-pound steer averaging 143.43. That was down just 46 cents from the previous week, but had some sales in there, like I said, on true yearlings that was holding that thing up, and our pool of cattle going into those indices, both real-time index and your CME feeder cattle index, are getting really shallow, so it doesn't take a lot to move them. You had sales like Valentine, Nebraska, and I mentioned that late in the week there on your feeder flash. You just wonder, you know, what guys are thinking when they're doing that. I realize the cattle are the best in the world coming out of those sand deals. I'll grant you that. The weigh up's really good there in Valentine. Those cattle are going to be empty. There's not going to have a lot of flesh on them. But there's a limit. You can pay too much for gold too. But you look at some of the prices out of Valentine. I'll give you the one quote on the 200 head string of one raised and 770-pound yearling steers there, bring $178.50. You can buy them in any direction, $20 a hundred cheaper all day long. But on a market, and I had one guy call me that heard the quotes out of Valentine, and he said, so do they serve beer and whiskey before the sale there in Valentine? And I said, no, not as far as I know. I've been to some horse sales and some dairy sales and some production bull sales and things where they'll get you lubed up before, but I've never heard of a commercial feeder cattle auction where they do. But a quote that's not crazy like that, but still on the high end and up there in Nebraska where those cattle bring it all, was Friday at 2 o'clock in the afternoon, Lexington, Nebraska. 124 head string of steers, 896 pounds, 150-185. So that's your week's markets from a home DV auction office here in Canyon, Texas. We'll talk to you on Wednesday.